All right, I'm welcome back for the episode of Carnivore Trades. Today is Thursday, March 2nd, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading, alerts, and analysis. Anyways, let's get into the market here. So, kind of a zigzag up here today. So, yesterday in the video, I talked about the possibility of a big move here, and I said that if we gap down, it probably wouldn't be a dip for buying. I did kind of change my mind this morning. I don't know if you guys caught the short video. I put out pre-market today, but kind of just looking at the futures here, and I didn't like how we were pushing down. We had some comments out of Japan last night, JGB, Takata was talking. Yield started to surge here, and we kind of went into this pivot here on the ES and into that 100 and 200 moving average, and we were off the lows by that point. It just didn't have a really good look to it, and I said we probably need to bid up here a little bit. I think the bears probably need one more lower high to break this down. Notice how you have, if we flip back over to the spiders, notice how we just kind of have like lows, lower low, lower low, and it's kind of almost, you're getting kind of like a divergent kind of pattern here. It's been kind of a walk down, really just a grind lower. And it does look like it did look like to me this morning the bears were a little bit tired here. So was looking for a bounce. We did get that after the gap down this morning, and we have a pretty good reversal on our hands. Markets were basically negative up until about 1:30. Bostic, they put their job owner Bostic out there, and he basically said, oh, it just came out of the blue and just said, oh, we might pause by summer, which was just, to me, that translates to we're seeing the 2-year yield approach 5%, and we're just doing everything we can to stop that happening, because I think that's the panic level. Once that hits, that's where you're going to see problems. Now, strangely enough, we know here that the bond market is what matters, and it never ceases to amaze me here. So, I mean, just look at the spiders, look at the algo buy there. I say this all the time in here, but okay, so if the Fed is supposedly going to pause, the 2-year yield must be coming down, right? Like, it has to be. The spiders are ripping, right? Oh, no, the 2-year it's sideways from Bostic's comments. We got that one little uptick here, and now we're just kind of consolidating that. Let's look at the 10-year. Oh, the 10-year is actually lower. The 30-year is lower than when he made those comments. So it just, it never ceases to amaze me here how, like the stock market, it's definitely the dumb one of the two, and how those algos just, they'll eat it up on the spiders, but bonds are just kind of not even moving here, not even budging. So, and you know that it's BS anyway, because the Fed funds rate is short of 360, and the 2-year currently is at almost 5%. So Fed has more work to do regardless of what happens. But that's where we're at right now. Bottom line, like I said, they're basically defending that 200 MA for now. It's not the most major support, though. We've hammered on it plenty of times now. I think that if we do retrace, we'll probably want to get up into that 400 handle there on the spiders, which should happen tomorrow. And I said that yesterday, if we do bid up, we likely won't see them move down on Friday. It'll probably come next week if we're going to do it. But I think the bears do need to have one more kind of lower high here. And again, we're into this nexus here of this trend line and that previous, that's not it, previous hourly green bar low there, or weekly green bar low there. And there's the 50-week moving average as well. So we'll see if we test that one more time. That should be pretty decent resistance. Maybe we could even get a little bit above it. There's a pivot up here at 401.29. And then above that, you have the 20 MA kind of down sloping. There's a gap window right in that area. So again, markets live to fight another day here. And that's really the bottom line here. But, interesting, just very interesting here to see the bond market, the dynamic here. It's just been such a grind. I was going to say all year, but really since like November, December, we've just been range bound here, and it's tough. I'm personally ready for this trend, or I'm personally ready for trend to be reestablished and the market to pick a direction here. But, we got to be patient here for the time being. Anyways, let's get over to the Qs. So the Qs actually were getting hit a lot harder this morning, and that's despite Salesforce earnings today, which we'll talk about in a minute when we get to cloud software. But you see that Semis now up 80 basis points here. The Qs gap down pretty nicely. The semis were weak all morning. Qs were weak all morning. And then obviously that kind of flipped as soon as, the pause talk kind of went on. You can almost make a case that we went down to this lower trend line again. And now again on the upside, maybe we have to hammer on this one more time. So that area there right around 296, that should coincide with that level there on the spiders. Just about, I mean, it's about the same distance away there as the Qs and the SPY. So we'll be watching that area there. Again, it's holding the 200 moving average, and it did hold major support here on the weekly. If bears were able to keep this below 290 today, like for instance, if we had rolled over instead of popped, we would be on our way to being much lower, and we probably would gap and go to the downside tomorrow, because that level is major, major, major support. And once that goes, this market's going to go very heavily to the downside. But again, right now, we'll give the market the benefit of the doubt. It's oversold. It's getting a bounce. So we'll see what we get here tomorrow. IWM here still has a bearish pattern here on the daily. So you have that little inside bar starting to kind of, it's consolidating further. Again, we talked about this. I want to see it mature a little bit more. Maybe you can retest, the pivots up here. Maybe you can retest the red bar high. You got the 20 moving average down sloping. Again, this is assuming the market gets a bid tomorrow, which I think it's in position to do. So, there's nothing to say it can't. But again, same kind of pattern here on the daily time frame of the IWM. And we'll just leave it at that there. The Dow was much higher all day today. Even when we were down, the Dow is actually basically opened green. And you might say, how's that possible with the market down as much as it was? Well, first of all, the Dow is a safe haven. So when there's risk off, the Dow tends to be gets more of a bid. Secondly, the Dow, a lot of the losses have already pulled forward. Remember, we're already at that December 22nd pivot as of yesterday. So it's already a little more oversold and everything. And thirdly, Salesforce is in the Dow. And Salesforce gapped up heavily today, got all the way up to 193, almost 194. Came in pretty sharply, a lot of supply up here. Put a nice gap there for Salesforce, and then we'll just cover the IGV now again. That obviously lifting cloud software as a whole. Here you see IGV up 2.4% on the day. Nice little up move, little zigzag up there. So again, that really started to get going once Bostic went on the microphone, but so cloud looks like they're going to save this one on a weekly basis too. So again, we talked about that pivot going out or getting closed below last week, and not the green bar low. So kind of 1 out of 2 here. It does look like they're trying to save that green bar low and that 50-week moving average for now. So again, we'll give cloud the benefit of the doubt for now. But again, not the greatest look here for the most part on the daily time frame. Semiconductors getting a bid basically off this trend line again, close enough here for government work, I suppose. Nvidia gap down with everything else, and we kind of had another kind of zigzag up there. So Nvidia also lives to fight another day, up 2.5%. It's holding that 20 moving average. Not a terrible look there for NVDA. I think Broadcom, if I'm not mistaken, is reporting, so we'll be watching that after the bell there. But the semiconductors here, nice move off the lows there. We'll see it's got the 20 MA, you've got a gap up there, so those could be some short-term targets. Again, and there's that pivot there around 247, 248, and 250. That will be resistance on the upside if we get up there. Transport, strong day today. So transport's trying to negate this red bar high. So 15,018. We're just above that right now. There's the daily 20 moving average. We're basically about to kiss that. How many points are we have? About 30 points away there, so not that far. If it gets up there, we might get back to that 15.5 area after all. We talked about that on that last leg. We said, hey, this probably wants to go up there and tag 15.5. It didn't quite get there, obviously. Now you've got a lower low here, but maybe it can get up there after all. But either way, nice little day for the transports. The bid's really coming from XPO, XPO Logistics trucking name, and JB Hunt. Those are really the big ones that are up today. The Jets are up nicely, but they weren't green until the Bostic comments. It wasn't really, even like UPS, wasn't up a ton earlier. FedEx was not up a ton earlier. It's really coming from those trucking names there. But either way, transport's holding up for now, so we'll respect them. All right. We already mentioned rates here. We'll take a look at the ZT really quick. So that did hit double bottom, and we talked about this yesterday as well. If we get a double bottom pierce, that might be kind of what, if we get a bid off of double bottom, that might give the markets a lift. And, I guess it's starting to, but I mean, this isn't exactly like a robust move here. This is still kind of just like we're looking at the intraday here now. I mean, this is still, you can just draw this in. I mean, that's just kind of like a bare wedge. So, it looks a little bit more algo driven to me, but either way, bonds still getting crushed here. There's the ZN, the 10-year, that's a new low. ZB, that's a new low as well. So not good in bond land, but stocks are holding up right now. So we'll respect them, but again, we know which one is lying here. Anyways, over to housing. So let's get to the XHP. Again, little gap down this morning. Kissed the 50 MA again, still inside of this red bar, so nothing's really changed. This can rally up a little bit. Maybe we can get to gap fill. It's been resilient all year. Housing has been resilient, really, even last year for the most part here. There's the ITB, same thing. So you gap fill at 68, 65. That could be a target on the upside. The VNQ. Again, this is oversold. We talked about a bounce here. It's finally getting a defense at that 100 MA. Nice engulfing reversal there for VNQ. We'll see how it does at this trend line here. Then you got the 50 MA above that. And then right here is your kind of big area, right around 88.60. So red bar high and then pivot, 200 moving average. That would be kind of your bigger resistance level there on the VNQ if we were to rally up there. Financials, definitely on the weaker side. So down 0.5%, even though they're off the lows, the XLF here, still down 0.5%. I believe it was Blackstone. Yeah, they had news today. And Credit Suisse, new all-time lows here, down 6.33%. It does look like, to me, like I said earlier, Bostic, the Fed, they're worried about the 2-year yield. I think they're worried about this too, and that's why they came up with that pump job today. This is not a good look here. Let's look at the KRE. Even though that's off the lows, that's an ugly candle. I mean, we just wiped out, a month worth of trading in, well, I guess not in one day, but we've wiped out more than the FOMC rally there on the KRE. KBE, same thing. It's trying to hold on to these moving averages here, but bank's not in really good shape. Goldman is now positive here on the day, so that did manage to come back. Morgan Stanley, JPM. Yeah, JPM's trying to hang on there, but down almost 1%. So banks are definitely in a weaker shape here. And again, this did precede the last major sell-off that we had. So again, we'll keep an eye on this. But for right now, again, the market is holding up. I think they're trying to keep it held up right now. Bonds don't seem to think it's going to, though. So anyways, broker-dealers, again, much like you'd expect. Just a little test candle today. This is hanging in there. If this goes sideways, this can go lower here. Ultimately, it wants to go into this trend line. And then once I think that breaks, that's when we start to really accelerate. But it's holding up for now, so we'll leave it at that. Crude, all over the map again today. I'm not going to continue to cover this, extensively. You guys know my thoughts on this. It's in a range until proven otherwise here. XLE, again, nice bid up into the red bar high here. And again, this is, XLE actually seems to be respecting bonds a little bit. Again, you can see it barely gap down this morning and it continued to rally up here. So XLE into that 20 MA gap window. If it gets through that, you can get to the next gap up at 87.63. XOP also holding up as well. Again, very range bound here, still has a weekly bear pattern with kind of lower highs. So we'll definitely respect that, but it's holding up again. So again, we'll give it the benefit of the doubt. OIH with a nice power move above this red bar. So obviously they're going to save that weekly level there. So we'll leave that alone for now. That one might want to get to 350 after all. I don't see any problems with it currently. Nat gas, finally a pullback day here. But it's, the dip's kind of being bought. You did have a little bit of a micro kind of rising wedge here on the hourly. It's kind of hard to see it, but, kind of starting to work it off a little bit, which is good. So again, kind of a rising wedge. If this goes sideways, though, it can kind of negate that. I'd love to see nat gas go sideways a little bit more and work off that kind of short-term overbought condition for another leg up. You guys know I'm calling for $3.75 to $4 here, but nat gas finally with a little stall out here, and the dollar index up almost 0.5% on the day. up move, and it's just flagging here. So, and the market's rallying even though the dollar's held up. Even if we look on the intraday here, dollar's held up, you still have higher lows. So it's hanging in there okay. I think this is just an oversold bounce here on the markets, to be completely honest. Anyways, gold here, inside day, again, dollar has strength here. We're not expecting a huge pop on gold. Maybe you can get a little bit of a counter trend bid. 50 MA 1875 is definitely not out of the question here, but this still has one more leg lower, as does silver. Silver a little bit on the weaker side, down 30 basis points. It's hanging out of that 200 moving average. Maybe it can get up to 22 here, but this one still has lower to go. Platinum still hanging in there, so showing some strength here, up 57 basis points. A possible little W pattern there, so we'll continue to watch that. I still think metals in general have one more leg down, but platinum showing relative strength. And then copper, we talked about that 418 area yesterday. Didn't quite get there, it rolled right over there. So copper, again, still has lower highs here on the daily. We are expecting this to go to 375 for right now. I had a nice retrace yesterday, but it gave all those gains back there. So copper in a little bit of rush shape. All right. Lastly, over to Bitcoin here. So Bitcoin's still hanging in there. Not really participating in the little Bostic rally. Bitcoin tends to march on its own time a little bit. I mean, yeah, you got a little bit of a bid there, but it's not making higher highs with everything else. And you still have this kind of like micro inside bar pattern. So we'll see which one wins out. Again, it's holding up. There's not really too much to add to it. If it starts to break down and loses this green bar low, then it's headed a lot lower. If not, we'll see. Maybe we can make another high here. There is kind of like an upsloping trend line right here. Could take you to 26,000, maybe a little bit higher. I talked about that 28,000 area. That would be kind of your max move, I think. But again, it's hanging in there, so we'll respect it. All right. Lastly, let's take one last look at the spiders here. So it looks like we're getting a bid here in the last IWM squeezing up. Yeah, we're getting a nice bid there, 398. We did get through the gamma wall. It looks like we're getting some market maker hedge unwinding here. So 39.50 has been a gamma wall the last couple of days for the 0 DTEs, and we are through that. So that's probably, we're probably getting a little bit of a unwinding because we opened below that and now we're above it. So market getting a squeeze here. Again, we'll see if we get up to that 4,000 handle. At this point, we're not really even that far away here on the SPX. And on the spiders, yeah, not really that far away. So 398.50. Yeah, we can easily get up there tomorrow, maybe even through that. So a nice little bid there for the spiders for now. Anyways, guys, going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. I'll talk to you guys all tomorrow.